Welcome to Bloomberg Markets. I'm Scarlett Fu. Stocks are getting ready to close out the week with gains, with traders now increasingly betting on a 50 basis point rate cut at next week's Fed meeting. You look at the S&P 500, and so far this week, it has closed up every single day, and it looks right now set to do it again today. Within the equities complex, the small caps are leading the way. The Russell 2000 up 2.5%. Of course, small caps are seen as benefiting more from a Fed cut in the near term, given the massive gains that we have seen in big tech up until now. There's movement across treasuries, rising across the curve, but especially at the short end, which is, of course, more sensitive to Fed policy. The 2-year down 6 basis points to 3.57%. And I included gold there now at 2610. That is a new record high. All right, let's go back to equities to just highlight a couple of movers. And first up, we wanted to show you Restoration Hardware. Up on results, the home furnishings retailer reported sales and EPS above analyst estimates and also said demand trends have been improving. Now, moving to the downside is Adobe, the creative graphics software maker. Those shares sliding the most in half a year on a disappointing sales outlook. Investors all through this earnings season have been impatient to see how revenue from AI businesses are showing up on the results, and that was also the case with Adobe. The stock is down about 9.4% over the past 2 days. Staying with decliners, the worst performer in the Dow Industrials today is Boeing, and this is as its factory workers walked off the job for the first time in 16 years. Members of Boeing's largest union last night overwhelmingly rejected a contract offer and voted to go on strike. That sentiment being reflected earlier by one of the union leaders.
This is about respect. This is about addressing the past, and this is about fighting for our future. Our members rejected the contract by 94.6%.
For the latest on what's going on with the labor action, we're joined now by Sid Phillip. He is Bloomberg's deputy editor for global aviation. So, Sid, the contract they voted on included a 25% raise over 4 years. That's the largest ever, but the union wants more. What specifically are they pushing for?
They were pushing for about 40%, and they were also asking for a restoration of pensions. They were asking for an increase in healthcare expenditure. So essentially, they were asking for a lot more, and they didn't get that. And given the fact that Boeing is in a precarious position, it is a good time for them to sort of try and get the best they can, because they felt that previous deals did not get them what they wanted.
Yeah, they feel they have the leverage now.
Exactly.
Do we know if the two sides are talking during the stoppage?
We do. We do know that both the sides want to get an agreement quickly. Boeing is desperate for a deal because they would like production to get back up, and they're concerned that essentially it would, as the longer a strike goes on, the less they can sort of produce planes, and that means no cash coming in. And so Boeing desperately needs a deal. The union's keen on getting a deal as well. And so it all depends on how long this strike lasts, and essentially that will determine what the financial impact will be on Boeing.
Well said. And we should mention, too, that the White House is involved as well. There's a full statement here, according to a White House spokesperson. Administration officials are in touch with Boeing and the machinists. We encourage them to negotiate in good faith toward an agreement that gives employees the benefits they deserve and makes the company stronger. Sid, I know that you were just listening to Boeing's CFO speak at an event. What did he say about the strike action?
He did say that it's too early to tell the impact of what the strike's going to be. He said the impact on cash flow and on cash flow progression for 24 and 25 is still uncertain, because essentially it's still a lot of work in progress. He did talk about how Boeing is keen on maintaining its investment grade rating, and they did sort of talk about how in the long term they do see a positive business for Boeing. So essentially they're looking to get around this issue. They said that they're willing to get a deal, they're willing to work with the unions, and they do sort of hope that in long term they can sort of turn this ship around.
Yeah, and you mentioned, of course, that he did say that Boeing still has this investment grade rating that they want to keep. Moody's may cut Boeing's ratings to junk status. I mean, it's just right at the cusp of that,
yeah,
right?
It is hovering just above junk, and so they need to do some actions in order to preserve that.
What are analysts saying about the strikes? Are any of them pointing to perhaps silver linings here?
So far, they're all talking about essentially it all depends on, everyone's hoping that it'll be a quick strike, and they're hoping that it will take much less time than previous ones, because in the past, in 2008, we had a 50-day strike, which that would be estimated to cost between 3 and 3.5 billion in cash flow. But essentially, if it was shorter, that might have a less of a financial impact, as well as it be able to get production quicker and sort of get back going. Otherwise, you have to wait much longer to get production and deliveries back on track.
And just when it comes to production, this is a work stoppage in the Seattle area factory. Which aircraft is this factory responsible for?
So this stoppage affects the 737, it affects the 777, the 767. The aircraft that isn't affected as much is the 787, but then Brian West, the CFO, did talk about how the 787 production is lower, it's basically below 5 a month because they're facing shortages of parts, including seats.
Yeah.
So many problems for Boeing at the moment.
Absolutely. Sid Phillip, thank you so much for bringing us up to date on the latest here. And of course, the timing couldn't be worse. We just talked about how this comes 8 months after that incident in midair where the door plug basically blew out. Boeing has been bleeding cash. Its credit rating is almost at junk status and could very well be cut. And of course, it's weighed down by $45 billion of debt as well. So what are some of the implications of this stoppage at a critical time? And where does this leave Boeing's leadership? Anita Mendiratta is Special Advisor to the Secretary General of UN Tourism and author of The Call to Leadership, Unlocking the Leader Within in Times of Crisis. And she joins us now. Anita, thank you so much for joining us. I know that you have tallied up the numbers that show the cost of this strike, not just financial, but in terms of the extent that the work stoppage will lead to production delays. Let's start with the fact that production has basically ground to a halt over in that Seattle area. What does that mean for production delays? What do your numbers indicate?
Brilliant. Scarlett, thank you for having me. And it is a tragic Friday the 13th, I must say. We're looking at up to effectively $100 to $150 million per day in terms of losses of production. But I want to go very much to what was being spoken about just now and what the union leader was speaking about as well. This is about so much more than the numbers. It is not just Boeing that is being impacted. The entire aviation industry and ecosystem is being impacted by this. Our world needs Boeing. Boeing ultimately is part of a duopoly between Boeing and Airbus. They represent 4 out of 10 commercial aircraft that we see. Plus, of course, there's cargo as well. And we also have, obviously, the aerospace going beyond in terms of the spacecraft. So this organization represents so much in terms of aviation for all of us, quite honestly, at a passenger level, at a trade level, at a global level. So the implications are massive. It's not as if we can simply say Boeing production is going to be reduced.
Yeah.
That this is happening with, again, the 737, that's an aircraft that's already been put pressure on production by the FAA. So this has a massive implication. Airbus cannot simply churn up and increase capacity. They're already struggling with deliveries. So this is going to have a huge implication on daily costs, on orders. If there are failures of contracts, that can be up to $1 billion in terms of expenses, and importantly, penalties, $10 million per aircraft in terms of the inability to supply contracts. So it truly is tragic. And really, to Kelly Ortberg, the new CEO, the 4th CEO in the last 10 years for Boeing, the spotlight is incredibly hot for him right now.
It certainly is. And I'm glad that you tallied up everything like that and really presented it as, the big picture for not just Boeing, but for the industry at large. Can we talk a little bit about the supply chain? Because Boeing has a very complex supply chain, something like 12,000 suppliers. So even if this is a short strike, and there's a lot of hope that perhaps it will end within a week, maybe within a month, the impact on suppliers, as you've noted, can last much, much longer.
Absolutely. And it's already been struggling because, as you said, 12,000 suppliers, all of them already being very untrusting of Boeing in terms of the ability to recover. And they're not just recovering from the shortages of delivery. Almost 16,000 commercial aircraft were grounded during the pandemic. So all of those aircraft are trying to get back in the air, plus the new provision. We need to also keep into mind that Boeing is at the forefront of innovation when it comes to sustainable aviation. The 737 MAX is one of the leaders in terms of cutting emissions and fuel management. So our ability to reach net zero, all of global aviation's aspirations towards sustainability rely on Boeing and rely on its suppliers. So the pressure goes right through the ecosystem.
Absolutely. The new CEO, Kelly Ortberg, he has urged union members not to strike. Of course, they did anyway. He has also vowed to reset labor relations. Do we know how big a factor he was in the negotiations before the strike?
One of the great things is that he's been very visible, he's been very audible, and as he said, no one wins if anyone walks out. He needs to establish a win-win-win for Boeing, for the employees, and for the industry itself. Thankfully, again, he has been very much at the forefront of this. He needs to continue to be so, because ultimately, and again, as one of the union leaders said, this is about respect. They need trust the new CEO. Why should they when they question? We've had 4 in the past decade. Why is Kelly different? So he needs to be very visible. He needs to be very accountable. And he needs to be human, quite honestly, and being compassionate to how they have suffered. And they also need to be understanding of how the organization, which they love, will suffer if the strike continues.
Anita, one last question to you, and quickly here. In terms of reputational damage, we know that it took Boeing a while to land upon Ortberg as its new CEO. How much grace will the board be inclined to extend to him to sort this out, to resolve this before they get impatient?
Oh, absolutely zero. He's been in the job for 1 month, and he's also already facing challenges across every single business unit. And it's understandable, again, that the business, the employees, the industry, the suppliers are impatient. Everyone is waiting for Boeing to recover. And I think that's an important part of it. We want Kelly to succeed. We need to back him. So we need to really support him very much from the point of view of withholding criticism. I think this is one of the few companies, Scarlett, where we've actually seen so much focus at all levels, from an audience level, from an industry level. We need him to succeed. And that's where, again, I give him full credit in stepping forward. He came out of retirement to take on this job.
Yes, he did.
He knew what he was walking into. So credit where it's due. And please, this strike does not carry on, because no one, especially Boeing employees, want to see Boeing fail.
Anita Mendiratta is special advisor to the Secretary General of UN Tourism. She's a global consultant and advisor to many in the travel, tourism, and aviation sector as well. Thank you so much. Now, coming up on Bloomberg Markets, Uber making an announcement that is driving a significant market response. You could see there the pop in the stock. We have that as our stock of the hour next. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. It's time now for our stock of the hour. So we want to bring in Abigail Doolittle for a look at Uber, right?
Absolutely, Scarlett. It is certainly a big stock story on the day. And I should say stocks of the day, because it's not just Uber that's responding well to this news. We also have the shares of Alphabet climbing. Uber heading to the best day in about a month. Google or Alphabet off of its highs, but nonetheless up 1.4%. At the highs, up more than 2%. At that point, Alphabet had been on pace for the best day in 2 months. All of this, of course, having to do with that Uber-Waymo deal. This is an expansion of their relationship, their partnership that they established last year. This particular deal is an exclusive offering where the Uber app will be used for Waymo vehicles, those Jaguar I-Pace, the electric vehicles, in both Atlanta, Georgia, and Austin, Texas. Austin's interesting only because of Elon Musk's presence there, so it seems as though they're really trying to have a footstep there. But essentially, Uber will not only manage the technology of the app for the rides, but it will also manage services such as cleaning and repairing these vehicles. They're planning on the fleet in these areas to expand significantly. This deal will take place early next year. And of course, it does help Uber pivot to being a platform for commercializing autonomous cars. But Uber's already doing really quite well. If we take a look at the subscribers for Uber, this is clearly moving in the right direction over the last number of years, more than 5 years. The last quarter, more than 150 million subscribers for Uber. So you have to believe, Scarlett, that with this expansion of this exclusive deal between Uber and Waymo in both Atlanta, Georgia, and Austin, Texas, that it will help this trajectory.
Yeah, the future is coming. Driverless cars in Austin and Atlanta. Thank you so much, Abigail Doolittle. All right, coming up, we're going to take a look at Bloomberg's big take today, which is the ugly truth about student athletes getting paid, because sometimes they don't. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. We turn now to Bloomberg's big take story this Friday, which is the floodgates now wide open for college athletes to get paid. But our reporting reveals that young athletes face a wild west of abruptly scrapped deals and huge disparities in compensation. I want to welcome now the reporter who worked for months to bring us the story, Peter Robison. Peter, really we're talking about college football here and maybe to a smaller extent college basketball. And college football has become unrecognizable to traditional fans, right? You've got players switching teams like free agents. You've got players making millions from endorsement. UC Berkeley is part of the Atlantic Coast Conference. And all this comes down to a court decision that allows college athletes to profit off their name, image, and likeness. Is that right?
Yeah, the floodgates really opened back in 2021. That's when the NCAA let athletes profit from what are called name, image, and likeness deals. And it also changed the transfer rules, which let athletes in the big-time revenue sports move more easily from school to school. So what happened is that sort of alchemized into a de facto pay-to-play system where you have these booster groups, which are essentially the wealthiest people in town. Think the richest car dealer in town, the richest real estate developer. They get together, they pay to bring players to their school, and the university has this sort of hands-off third-party relationship. And we uncovered many cases where these athletes were promised one thing and got another, and promised big money, and then the contracts are abruptly pulled.
Mm-hmm. You described cases where players were taken advantage of. They were terminated without any notice, even though they did sign a contract. They were also promised money that never appeared. What kind of role does the NCAA or Congress play here? I know there's been a lot of hearings in Congress, but what's come out of any of that?
The big issue is that the NCAA has really lost the ability to enforce its own rules. It's repeatedly lost antitrust suits. And just hasn't been able to put any guardrails around this. Congress has held a dozen hearings since 2020, and again, there's been no bipartisan legislation. And what's really missing is anyone representing the players. The coaches, administrators are professionalized now in college football. They make salaries. Even the assistant coaches in college football hire agents and negotiate salaries from $400,000 to $2.5 million. And people hear about these big deals for certain college athletes, and that's certainly true. Some of them are getting these big deals, but the reporting that my colleague Noah Buher and I did shows that the vast majority of the players are really at the mercy of these donor groups to take what they can get. Mm-hmm. We described a situation that was not known last year, where the Michigan State Spartans actually had a near walkout before a game because the donor group abruptly pulled their funds.
Right. Peter, it's a fantastic story, and I encourage anyone to go and read it. Check it out on Bloomberg.com. Peter Robison writing today's big take, and of course it is available across our platforms. We want to stay now with the business of sports, and you might have seen viral videos of people watching football where it looks like they're standing in the end zone during a touchdown. In real life, they're actually at a venue that sells tickets to watch live sports on a screen that is, well, larger than life. The tech and the business behind this experience is called Cosm. And joining us now to tell us all about it is Cosm President and CEO Jeb Terry. Jeb, hi, welcome. And give us a sense of where people can see these screens or be part of the experience. Are they at, for instance, college games, or are they only at professional games right now?
Hey, Scarlett, how are you? Thanks for having me on. So we've opened up our first two venues in Los Angeles and in North Texas in the Colony outside of Frisco. And these are the most dynamic experiential venues we think to hit the market ever. And we're showcasing live content from the entire world of sport, whether it's college football or it's Premier League or UFC. Mm-hmm. We have Noche UFC live in our venues this Saturday. So there's some incredible opportunities for fans to come see content of all sorts, live and also in post with experiential art and cinema and a number of different programming.
It sounds like these screens need to be at certain venues, or can they be installed, taken apart, installed in different places? Are they mobile? Yeah,
so right now we're focused on bringing all of our technology into our venues. The format's called shared reality, and it's more than just the display. It's about the feeling fans have within our venue. It's being able to walk around, have great hospitality, great food, drinks, really comfortable seating, and it leverages all of our homegrown technology. unknown fact is we're also one of the largest planetariums companies in the world. And so we're able to take this technology in sports and entertainment, also science and education, and a number of different avenues to make sure fans of all types get this incredible opportunity to experience the technology.
That makes a lot of sense, the planetarium link there. In your latest round of funding, Jeb, you raised over $250 million, and your backers include funds led by Mark Lasry, Dan Gilbert, David Blitzer. What is the status of their committing to make their games available on your technology?
Well, the key is that this growth round has helped us to realize our biggest vision, right? Our global ambition to deploy Cosm around the world. And when we think about all the various partners, there's capital partners, there's broadcast partners, there's media partners, and really work within the entire sports industry and the construct as a whole to bring this vision to life. And so we're really privileged to have so many fantastic thought leaders, stakeholders, really influential people within this industry behind our vision, helping us scale and take this global.
Which live event are you most excited to see projected on your screens and using your technology?
Well, I'm biased, clearly, Scarlett, I like them all. I love American football. As a former athlete myself, it's something that's near and dear to me. But I can tell you the Premier League, when you're coming live from all various parts around the world and bringing that live locally in Los Angeles and Texas and soon to be in Atlanta as well, there's really nothing like it. I mean, this weekend we have Arsenal-Tottenham from Hotspur Stadium, and that'll be live at 6 a.m. here, and we've got a sold-out crowd. And so it's really the power to transport fans and give them that experience that's almost like actually being there.
Right.
We can never replace the feeling of being there, that energy, but we're getting close, and our goal is to make sure that we let the fans come in and experience for themselves. And it's just a fantastic energy in the room.
Jeb Terry, really appreciate your joining us today. Jeb Terry is the president and CEO of Cosm. And I'm Scarlett Fu. That does it for Bloomberg Markets today. This is Bloomberg.